Hi, I'm your host, Sophocles Sophocleus. On this podcast, we discuss interesting stock ideas from around the world. The goal is to have meaningful discussions by getting into the numbers and better understanding the opportunity. Thank you for joining us. This podcast is being made available for educational purposes only. It should not be used for any other purpose. Full disclaimer at the end of the podcast. Today, I'd like to welcome Hadiyanto Wibawa, who is founder and managing partner of Arunika Capital. It's modeled after the original Buffett Partnership with no management fee, high watermark, and a performance allocation applied only to profits exceeding 6%. Hadi is personally invested alongside the limited partners. He was born in Indonesia and educated in Singapore. Hadi, welcome to the podcast. Thank you for doing this, and shout out to Mario. Thank you for introducing us.
Hi, Sophocles. Thank you so much, and thanks for having me here. I
So,
appreciate it.
how did you decide to do to model after the original Buffett partnership? Is that because it's mostly family money?
One is mostly family money. Two, I've read up on the Buffett, the Munger, the Lilu philosophy, as well as Monish, and I've realized, you know, the Buffett partnership model was probably the fairest of all. And yeah, we've kind of decided to do that with family money, and pretty much welcomed because we've been investing with the bankers for quite a while, and it wasn't really amounting to really good results. So yeah, having a fair model, creating a win-win scenario for both sides, hopefully it will translate in really good results. So please.
So, I'm guessing your family is back in Indonesia. Would that be Jakarta?
This is actually investing off a family business in that's based out of KL, Malaysia.
Oh, okay.
Yeah,
So, so there's an operating company, family business, and then you're using that float to invest, and you're also
exactly.
then taking some outside money.
If I perform.
The company we're going to be discussing today is Powermatic Data Systems. So what is the elevator pitch?
It's basically, I would say, it's a cheap special situation with a catalyst. It's Powermatic is essentially a low capex in the semiconductor line, but specifically only designing that they've been growing at a pretty decent clip in the industry. I mean, if you just take a look at the company itself, they had a price drop recently, probably about 100 million market cap, holding about 50 something million in net cash, and trading probably at about 10 times EV to EBIT with 40% impressive margins. So yeah, I would say it's a company that's fundamentally strong, growing, and undervalued if you just look at it as an operating entity. And here's the catalyst: is it basically owns a building, and it's kind of like spinning it off. Potentially, it's about 70,000 square feet. They're looking to sell it at about 1,500 PSF. So it's a cheap play, but with a catalyst.
I've actually have my Excel here open. I've been putting in some numbers, so we'll go over that in a little bit. But first, what exactly is the operating company do? Is it just like
So
some
Palm,
wireless products?
no, so they're 1 out of 10 authorized Qualcomm design company. So they specialize in from the OEM perspective and the ODM perspective for wireless connectivity devices. So they specialize in designing or making the wireless radio modules, the board, the antenna, or the access points. Like in essence, they are designing and manufacturing the components that makes Wi-Fi possible.
Authorized from Qualcomm? Is it just like a certification which then they use to sell to other customers?
Oh, in a sense, they're like a approved customer service provider for Qualcomm. but they do serve other customers as well. So they use that as a branding to reach out to others, saying because they're the only one out of 10 in the world, and they're probably the only one in Asia for Qualcomm. So it kind of makes them kind of special. So it's a very niche area where, if you think about it, the thing that they design or they make is a really small cost of the entire component, but it's a very necessary component.
Yeah, that's great because, if I'm looking at a small company and, having that relationship with Qualcomm sort of tells me, these guys are legit.
Powermatic actually started as a the typical distributor reseller kind of model before 2016. So
Hmm.
2016 marked their I would say their pivotal year, because they decided to focus on the designing and the selling of really high margin products. So you could see the pricing power in the margins. You see, from like pre 2016, it was like really low. It was like mid tens maybe, to right now it's probably in the mid 30s for the past 5 years, and this is not just post-COVID numbers. Like if you really see pre-COVID, it's been hovering about 30%.
You can see the gross margin just jump, like you said,
Yeah,
post 2016. That was because of change in the product lines they were focusing on.
yeah. And the CEO and founder himself used to be an academic teacher, I think, and he probably specialized in this area, and he saw this niche, and he decided to make a jump. And if you really see the sales, like it's pretty international. Like probably about 50% Europe, 30 something percent Asia, and surprisingly US was only like 15 to 20%. So
Mm.
it's pretty
Yep.
international, high margins, and they don't really employ a lot of people as well. So, and low capex. So it's a pretty decent business, and it's growing. And I mean, if you think about Wi-Fi, right? Like everything in our life, it's getting connected. It's not just about cables anymore. It's all about Wi-Fi. So they seem to be sitting in a pretty niche strategic area where you could see tailwinds, and that was something that I
Hmm.
thought was
Hmm.
pretty interesting about this company.
Hmm. And this is like you're talking about the owner, Dr. Chen Moon, who I believe has around 55%. What do you think of him?
Well, I've never met him. The only piece of information I've seen around was just basically of the annual report. Of the annual reports, I actually think he's just like the typical Asian businessman, um, full of integrity. He means what he says, and you could see it in the numbers, right? Like it's really solid numbers. You know, probably your handshake kind of Asian gentleman, and but most importantly, I do think that he has an eye on cost, because if you really see his transcripts and everything, is always cost. And I think if you see the SG&A and everything, operating expenses, it doesn't go as high as the revenue, and uh, operating costs in pretty, to the right, like pretty stable, not really growing much. So very, very Asian. P&L, make sure it's profit, get up the revenue, and make sure the cost doesn't go up. So yeah, that's
Yeah.
I find that's really impressive.
He seems to be super conservative looking at balance sheet. This guy has like way too much cash on the balance sheet. And it's not like now, like it's like what, a 55 million now, it's around there. And it's like I look back over the last decade and there's always been a ridiculous amount of cash. So, has he said anything about this? Why is there so much cash? Why isn't he distributing it? Has anyone said anything?
Actually, if you track the dividend payout ratio, for the past 5 years, they've been paying 5 cents a share. There was a special 10 cents a share. I think in maybe in 2019 or something. The reason for their cash hoard is, I mean, they've been maintaining the amount that they're paying as dividends while they're making higher and higher profits. I think that's the reason. And Singapore is actually a dividend focused investing nation. Like if you really constantly pay your dividends, your share price is gonna go up like constantly. Like you just need to see the three local banks. It's like a 45-degree angle. For him, I've been tracking his for the past few years, his annual reports. He has never said anything. He just said that we're always making sure that we have a prudent balance sheet, fortified, and when opportunity comes, we can really hit it. And I think his cash hoard and his conservative ways is really dragging his ROE. But at the core of it, the company is still really making money, and it doesn't seem that it's gonna give away the cash, and that's
Yeah.
probably the reason why he's looking to redevelop his property.
Yeah, I mean, I was looking here, the dividends cost them like less than 2 million when he has like 50 million in cash, 55 million in cash, and his cash he has more cash than revenue.
Ah,
Um which is just, and but the thing is he also controls 55%, so with the second biggest shareholder being Catherine Ang B. Yan, which I tried to find out stuff about her, but I couldn't really find out much. I don't know if you found out anything um, about Miss Catherine.
not yet, actually. I tried. I was hoping to get to the next AGM, but I couldn't find anything about her. But I found two info. Was like actually on the board, her nephew sits on the board and her sister sits on the board on top of her, on top
On
of
top of
Dr.
her.
Chen Man, yeah, on top of Dr. Chen Man as well. So
So there's a question here if they're related or not, basically, and I know we talked about this earlier. Like you and me were both googling around. I couldn't find out. You have to get to the AGM, the live AGM, and go in there. I think and just ask them.
exactly, that's my intent actually.
Are they having that in Singapore? It's in Singapore, the AGM, I think.
They do have, but they haven't announced the latest dates actually. So I'm
Okay.
really looking forward to
And
really
but
going.
them being this conservative, I mean, aren't you afraid maybe they develop the property, which is basically the catalyst here that we're talking about. They develop the property, they sell it, whatever, and then they decide to just hold more cash. There's, I guess, a small risk there that they change their mind.
I did think about that. I mean, if you think about it, their working capital is only like 50 million. It's a very profitable business. It's kind of growing. It's low capex. He has 55 million in the bank. If he really sells the entire property, he's probably gonna be net cash another 80 million. What is he gonna do with so much cash in the bank? Like,
Yeah, the
and
cash
he's
will be
actually a
more than the
pretty
market cap. The cash will be more than the market cap.
exactly,
Um,
and he's quite a prudent capital allocator. I find, like if you think about, he switched from being a low margin distributor to being a product guy. You know, I used to be in IT. I know that's not easy, and to be like international. Finding a company in Singapore that's international is very rare, Sophocles. Like
they're developing this property. Market cap 101 million. The property is worth probably about 105 million based on 70,000 square feet and a 1,500 selling price. And based on some research I did, it seems that there's a range there that for food being around 1,300 to 1,700, something like that. Is that what do you think this thing can fetch? The average selling price could be on this.
so,
Does that
if you
sound
look at
reasonable?
it's very reasonable. Like the area where the land sits on is actually pretty central, and there's a couple of food factories. The area where that building sits on is actually an area that's zoned, that's allowed by the Singapore government for food factories, central kitchens. And the Singapore government typically zones certain areas for certain usage, based on connectivity, based on the usage. So that area is well known to be a central kitchen. There's another central kitchen area that's like on the northeast side of Singapore, way out of the way. I wouldn't say it's as connected as this one. They're really trying to sell it for 1,500. And if you look at the caveats that's locked with URA, they've already Powermatic themselves have sold about 23 to 24% of existing units. That's already sold, and they only started selling late October. So late October, 1 month, already 23% sold at an average price of 1,500. Yeah, so I think the ballpark figure of 70,000 square feet at 1,500, getting 100 plus million in sales minus a week cost, which is about 28 million. They're probably gonna get about 80 million in cash, and him holding 55% of it, he's due, what's that, 45 million out of that. Well, that's pretty sizable. That he could do whatever he want as a dividend. So that's his
Hmm.
bonus. Yeah.
What surprised me is that they're doing this because they're going to spend 28 million to fix up this property to sell it. Comes out to 105 million to develop it. It would cost me at least, you know, 30 million. Now that means I'm going to get 70, let's say, million net. Why
Hmm.
don't I just sell it for 60 and I'm done? Give up a little bit of that profit, but you don't have the headache of having to sell this and develop this and the risk, and then there's time value of money. So what do you think of that?
It's very valid. I mean, like, who doesn't want, you don't do anything and you get the cash in. Shareholders have been asking, hey, what are you going to do about the building? Because they were only renting like I think 3 units of the entire six-floor buildings prior, and they were renting the other units out. So the yield they were getting wasn't really fantastic. I think it was about 3% or something. So people have been asking to redevelop the building, and this since 2016. I think the catalyst came after COVID, because after COVID, I don't know if you know, but the demand for Singapore citizenship shot up, rocket up. Like there was so
For food
many.
kitchens.
No, for to stay in Singapore. So as a result, if you see land prices after COVID, literally shot up. Like we're probably dealing in the heart of Orchard. You're probably talking about um, the 3,500 right now. Pre-COVID, you're probably talking. This is central prime Singapore, right? Like pre-COVID is maybe like 2,000. Now it's 3,500. So it literally shot up, and what the Singapore government have done, like post COVID, was like people realize that staying in Singapore is safe, healthy. Um, it's a really good environment to stay and to bring up your kids. So I think he realized that his land value have really shot up high, right? And in Singapore, to really construct a building, because we're in construction ourselves, so we kind of realize this. There's various ways for you to form the contract, and one of the most frequently used ways is what they call they call it GMP, General Maximum Price. So basically, if you're a contractor and I tender the contract out, you tell me what the maximum price is. If people were offering them, let's say 28 million as the max cost, then he could tell what was the price they was going to sell at, and he realized that there was a premium for him not doing anything. You see, so basically, he sits in an area where it's a central kitchen approved, and somebody was going to construct the building for him. All he needs to do is he needs to make sure that the contractor actually delivers in time, because you're going to get fined by the Singapore government if you do not build it and sell it in time. So uh, I think he realized that it was quite a low risk, high reward kind of thing, and that's probably what he did. Because he actually, sorry to add this on, he actually appraised it uh, sometime in 2022. His entire building at that point was about 62,000 square feet at about 700 PSF. So he was only able to sell it at about 40 odd million. I guess just by pushing the contract out and getting somebody to build for him, he could realize an extra 30 million. Why not?
Okay, so basically, there's low probability of an overrun in that 28 million cost.
Highly likely. Yeah. Highly likely.
Highly unlikely to have
No,
an overrun.
highly
Or
unlikely to have an overrun. Yeah.
okay,
Because
because they have to go get to the deadline because also they'll get fined by the Singapore government. Okay, that's cool.
yeah, it's 35% extra.
Oh, they would get charged 5% on the value of the property.
35.
35,
Yeah. That's why
30, 35 on the sell price, or 35 on the construction cost.
five no. So basically on the entire value that they think that they're gonna sell it, they need to put in a certain amount in IRAs. What happens is if you build up a building, let's say I approve you on the 1st of December 2024, okay? The moment the approval goes in, you basically need to sell it within 4 years. So which means you need to sell the entire piece by 2028. If you do not sell it, that deposit, you're not gonna get it back. So most developers know that, and they will try their absolute best to really sell everything off. So there's a cost deadline and there's a timing deadline that everybody had to run towards.
Wait,
So
so if you're selling going to sell something for 100 million, you have to deposit somewhere to the Singapore government 35 million?
yes, 30 to 35% as what they call ABSD. It's kind of like because people were building in so many offices, and there was quite a fair bit of unsold units. So this was one of the measures that the Singapore government actually introduced to make sure that developers don't just overbuild, but you build and you sell.
Wow.
If not, I'm gonna
So
fine you.
that's fantastic. I mean, I never knew that. So what the thing is, we're assuming here there's 70,000 square feet. We're assuming here that they're going to sell it all, but there is a case then where they only sell part of it and then they keep part of it for themselves.
Maybe if you said that they were gonna keep and keep as their Singapore office, maybe. But for you to build a central kitchen, right? You're gonna have like uh, wastage pipes. You're gonna have like unless they're going into the food business, which you know they've not said anything in any part of their annual reports. It's highly unlikely they're gonna. I mean, if they're gonna keep and rent it out, the yield is not gonna be that good. It's probably like 2-3%.
Okay, so I saw a paragraph somewhere in one of these Q&As they do that they're asked, are there any plans to rent out some units um, and or go into property management, blah, 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 if they're unable to sell the units? And part I'm thinking about is it is not a significant, wait, here it is. The company can use it if there are units that the company will retain for leasing. However, the main objective of the redevelopment is to sell all the developed units.
Because if they still have any units that's left unsold, that's still in the company's name, they're still gonna get fined by the Singapore government. Not the entire 35%, but probably like 2%, 3% and stuff. Yeah,
Okay,
so
so
they
they're
will be pressured to
incentivized to
sell
sell
that
it.
off. Yeah.
Okay, okay, all right. That makes a lot more sense.
Yeah.
So, what other costs are there? Like, are they going to be paying? Is there going to be some admin, marketing costs, agents' fees, other things beyond the 28 million? that it's going to reduce our profit here? Is there,
Uh,
taxes or like basically other costs beyond the cost of development? Because if there's the cost of development, but then there's like if they use some agents, then they're going to get a fee, and then if they have to hire some staff to do some marketing, then that's going to be some costs as well.
yeah, sales and marketing costs would probably be 1 to 2%. I think of the sales price. That would be
Okay.
one. As for capital gains, okay, capital gains. So, in Singapore, there's no capital gains tax. So I did research. Powermatic is actually registered as a IT company. Okay, so this is the part where I would say it's unknown. It's unknown, but you probably would need to factor in the corporate tax inside, like as a bear case.
Hmm.
How the government actually decide whether it wants to tax you for any capital gain for any capital gains is basically they need to evaluate whether it is this a trading activity or is this a one-off. So
Okay.
yeah, I would think Powermatic needs to uh, probably propose to the government that this is actually a one-off, a realization of value for shareholders. Because I mean, Singapore government is pretty astute, right? There've been people flipping properties and making so much money, and they realize, okay, if you're flipping properties, I'm gonna tax you as income. But in this case, it's a one-off,
Hmm.
redeveloping the whole
Hmm.
thing. I don't know if they're gonna be successful in like proposing it as a uh, one-time not trading activity. I think they can probably push through, but we won't know. But the bad case, you just need to factor in 17%, because 17% would be the maximum tax in corporate tax in Singapore anyway. So yeah, that would be a bad case. Best case is no tax at all. Yeah, there's been a trend in Singapore where people create it like a fund of funds. So basically, if you're the developer and you don't sell the whole unit out, let's say you're left with like 10%. People could actually come in and buy it at like wholesale at a small discount. We see those trends as well.
Okay. Worst case scenario, they have to pay 17%. Base case scenario, they don't pay tax on that. And for other fees, there's probably going to be a few million extra. Like, so we can pencil in 2, 3 million, I guess, to make it nice and easy. 2 plus 28 is 30. They sell for
Mm,
105 minus 30 gets us
75.
to 75. So we have this thing, 75 million, um, which the plan is, well, at least they've said they're going to distribute this to shareholders.
Mm-hmm.
So 75 million on 35 million shares is two
$2.
dollars 14 versus 289, which it's trading at. So
Yeah.
let's talk about the operating company. They had first half results. First half results came in, and look, the market did not like them. This was
Mm-hmm.
trading at about 340, around 340, and boom, it got knocked down to current 290. So it went from 340 to 290, roughly based on a disappointing first half results. There was a note that mentioned that basically there was pent up demand, and so they had this increased demand post COVID, and this is going away, and that's the main reason for this decline.
This gentleman, Dr. Chen, I think is quite a conservative guy. He's I If you read up on the 2023 report, and as well as certain portion of 2024, he did mention that there's been a lot of pent up demand and people has been buying a lot, and is probably guessing that people are going to tap on the brakes soon, and I think it came last quarter. But having said that, I mean it's still um, EBIT of like 1.5. If you analyze it, is 3 million. We'll see. I think needs to monitor for the subsequent quarters. But my thesis for this one is still like it's a special dividend of the real estate. It's basically pure off the real estate that you're gonna get your margin of safety. Yeah,
Hmm.
off
Hmm.
that, I think still an okay business, and still a
Hmm.
business that the that I do see tailwinds. So yeah, we'll see where it comes. After the special dividends, hopefully gets paid out. I think we'll see that in the next
Hmm. Hmm.
2 years
Yeah, because it looks
probably.
like. Because I'll tell you why. Because this is what it seems to me that the market is kind of saying. First half results is down. It was like you said, 1.5 million sales in operating profit. So 1.5 million operating profit. Annualize that, that's 3 million. There's probably about another half a million of depreciation, roughly, just of depreciation on PP&E. So it's 3.5 million. So if you put it, I don't know, 10 times, that comes out to like 35 million. And then so you have 35 million plus 75 million of the property gets you to 110, and it's trading at 101. And of course, there's probably going to be around 28 million in cash. So I guess the
Hmm.
market is kind of saying, well, you know what? He's not going to do anything with that cash. So it's like it's not there.
Yeah, yeah. I actually was tracking the past numbers since for the past 5 years. How has the stock price been doing as well? It's been selling at, I wouldn't say exciting levels. I think the EV/EBIT has been like single digits, for the past 5 years. But where I find the margin of safety is its gross profit has been growing at a very decent clip for the past 10 years, since 2016 when they pivoted to a design model. It's been growing like probably at 15% CAGR. Sales last quarter it's a little bit down. We just gotta monitor what's coming for the next 6 months.
Yeah.
Um,
Because here's
yeah,
the thing, it's like what we're talking about is probably like very pessimistic sort of scenario because we just said 1.5 million annualized, that's 3 million, but 3 million the last time they had such a low operating income was 2016. That was
exactly.
2016 was the last time they had 3 million in operating income. Then it went 3, 4, 5, 6, 8, 9, 9, 11, 12. So I think the company is doing a really piss poor job of communicating with investors, and it's as if they don't want the stock to go up. So, if I came out with, something like 3 million, which would take me back to 2016, I would sort of explain it better and probably have some investor call and have like, yeah, it's, 1.5 million now, but here's what our target is, and this is how we're going to achieve it, and this is how we're going to get to, I don't know, 6, 7, 8, 9 million, or back to 12, right? Because
Yeah,
that's the key for this case. What is the normalized level of operating profit? Um, because Qualcomm itself, is like it's trading at something like 11 times. So I think the key to there's two things. Is one, them realizing this property, which I'm thinking is going to take 2 years. Is that right?
I would think 2 years,
Okay.
maximum 3 years, because that would be the timeline that they need to sell everything. And so you actually buy yourself 3 years of time to see if um, their main operating entity really grows. And if you look at it, right, Dr. Chen has about 55%, Catherine has 8%. They're pretty much owner operators, so they
Oh
need to
yeah.
perform for their stake to grow. Yeah, it has to grow, and especially if you think about it, like we're going into a more wireless world. You're probably going to need more Wi-Fi devices. Yeah, there should be tailwinds. The market is really not giving them what's their due. So
Mhm, mhm.
yeah, it's probably an opportunity.
Yeah, I mean, because if these guys get back to their 12 million of last year at 10 times, it's 120 plus 75 from the property is 195 plus 28 from the cash. And this,
Mm-hmm.
so you're talking about 223 million. So this is like has like 100% upside.
Mm-hmm.
The good thing is this if this drop is temporary, let's say this temporarily gone to 3 million and this is like the bottom, then your downside is almost zero. It's practically zero. I mean, unless the operating gets worse and they don't do anything with the property, but assuming they're just go if they go from 12 million operating to 3 million and they use like this is like the bottom, then 3 million times 10 is 30 plus 35 from the property is 105, and you know market cap is 101, and we're not even taking into account the 28 million left over in cash. So it seems like,
Exactly.
worst case scenario, I don't lose. Best case scenario, I double my money.
Yeah, that would be the really bad case, And I did check, like do they have like big competitors in Singapore? There's actually none out of Singapore. So that's really the interesting part. Singapore government to realize that they need because Singapore is such a small country. There's no natural resources. You need successful businesses out of Singapore, and the government actually does a lot of stuff to really help you succeed and try their best. You don't go down.
I got a
So,
business plan for you. I got a business plan. You got to get the government to be
uh-huh.
like selling the Singapore sling in cans or something.
That's a good idea. Well, I think they do that. I think they
Starbucks
do.
does it. Why not? Why should Singapore have like here's the original recipe in a can, you know?
I think they serve that in Singapore Airlines. I actually think they do.
No, they do. I had a Singapore sling on Singapore Airlines. I remember
Did
this.
it taste as well as the bar?
Best cocktail I've ever had on an airplane. You already actually provided us with a lot of great insight from Singapore regarding how the government views the development, regarding how the demand and the increase in the property values there as well. Is there anything else you can share that would help us? I don't know, maybe conversations you've had with other locals or friends of yours who are investors on this. Well,
I think for well, value investing in Singapore has taken a different tack. Like in Singapore, it's all been like growth investing, and because actually in Singapore, it's very well, I wouldn't say it's very easy. In Singapore, as long as you buy real estate, it is pretty much foolproof. You'll make money in Singapore, anywhere, any part of Singapore, because I think it's a cornerstone of the Singapore government strategy to make real estate as a cornerstone of your wealth. So whenever I present this idea to them, they'll just go, "This is I don't understand this industry and everything." So yeah, there's usually pushback. But for the guys that understands, you know, price is what you pay, value is what you get. They see this and they do buy. The only problem of Powermatic is very few people are actually selling. So that's why I think you see the volatility in the prices. Like like if
the
you
low
really,
liquidity.
yeah, it's very low liquidity. So I think that's part of it. But to some of the investors that I talked to, they said this is quite a buy. Just wait. Anyway, this is it's a quasi real estate property play.
Mhm.
Your downside is so limited. So let's see what comes. Yeah,
Yeah, yeah. Are
very
there are there property stocks?
Not really property stocks, but if you really look at Singapore, you could look at the real estate agents. Because in Singapore, there's only two big ones. One is called ERA, one is called Propnex. The one that I wouldn't say suggest. Take a look at Propnex. The guy is giving like dividends like 10% dividend, you know, payout.
What's
Ten
it called?
percent. Propnex. What's the ticker? I forgot what's the ticker.
Propnex Singapore
Yeah,
Limited.
6-7%.
Propnex.
Yeah,
Propnex. Okay.
because when I was looking at I mean, if you think about it, the ROE for real estate agents is it's unlimited, and they take a percentage cut. Your property value goes up. You know the amount they get it goes up, and this guy takes I think 20 to 30% of the entire transaction value. So
Yeah, this went up from like pre-COVID 25 cents went up to like a dollar um,
yeah,
post-COVID. So I can see what you were talking about, that demand there coming in.
all the stuff. It's all the high net worths, the ultra high net worths. They're all coming to Singapore, man. It's like they gotta buy houses. Like even on the ultra rare, they call it GCBs, good class bungalows in Singapore, which is anything that's bigger than 15,000 square feet, limited. You can't really make them anymore. Like whatever is there is there. It's been shooting up the roof. Like if you see the property price, so you got your Grab founder just bought a GCB. The guy that makes the chair, Secret Lab, also just bought a GCB. Maybe Dr. Chen is eyeing a GCB. So yeah.
Do you think, going back to Powermatic, um, do you think this current first half was kind of like um, the worst, or you think this thing could be the new norm, or basically, what do you think of like the first half results?
I'd like to think so. Actually, I'd like to think so. I mean, if you think about it, right? If you take a look at the balance sheet, they still have stocks in two Thai companies that they bought for 300,000. I think it's probably trading at about 4 million right now. That they put it as cost as well. That's another booster as well. So this guy is quite conservative. He doesn't like to give really strong guidance. I guess in a sense, it's more like under promise over deliver. We'll have to see what's going to come on Q3, Q4. He has been performing for the past 8 years. I like to think this is a anomaly, but yeah, we still got to monitor. So please.
Yeah, I think that's in other financial assets. He has something like here 338,000
Yeah, that's the
quoted
one. Like
investment in quoted equity shares.
he bought it like 20 plus years ago. People have been asking him which companies are those. Like he never mentioned, but he did say that it's two Thai companies that's probably worth uh I would think it's between 4 to 5 million right now.
Yeah, actually, in the note of other financial assets, they say um, Technology Thailand.
Yeah.
So it's some technology company in Thailand. I guess that would narrow it down. Anyway, so it looks like there is even some additional hidden value there in this stock, but I guess how the products do themselves, the operating company, to see what would be the total upside, or if there's any downside. I guess the takeaway is 3 million is what they did in 2016, so that could be too low. So I guess
Yeah, I
that's a
think
big
so.
question there that our listeners can look into. So, is there anything else you'd like to mention about the stock, or shall we just round it up?
Pretty straightforward, easy real estate play on a growing business. That's all.
Okay. Is this the types of stocks that you do for your portfolio, or is this one's a special case?
This one's a special case. This one is it happened to pop up under the radar, and it's pretty interesting. I got to about maybe about 2% of their company, like pretty like when it was there was quite a fair bit of people selling, probably like 3 or 4 months back. So could kind of
Oh, so
scoop
you
up
own
quite a
about
fair
two
bit.
percent of the company then?
Yeah, maybe now it's about
It,
now
is
it's
it a
a little
big
bit
part of your
more.
is it a big part of your portfolio?
No,
Okay.
my other positions are some of the big names. Got the Google. Um,
Okay.
I've got a bit. Some of it I've got in China. Did you invest in China?
Yeah. I do own some Tencent.
I do own Tencent as well.
And I do own Google. We took a hit yesterday. So
Yeah. Hey, have you looked at
yeah.
Maotai 9?
600519 gives me, oh no, I've never heard of this one before, but this is in China. I don't have access to China. What do these guys do?
It's essentially the alcohol that every Chinese leader will pass to distinguished guest. So this one bottle can retail for like, if it's limited edition, it can retail for like 10 grand. Normal bottle is about 600, seven
No
hundred
way.
dollars. Yeah, the
So
cost
this
is like $50. So gross margin for like 90%. It's liquor.
so LVMH is going to come buy this.
Probably. Yeah, probably. It's something interesting. And anyways, yeah.
Anyways, so Hattie, this has been an amazing conversation. I really look forward if you make it over here to Cyprus to chat and more with you. If people want to reach out to you, how would they do that? Through your website? Is that right?
Yeah, arunika capital.com. That's where I am. I'm gonna start blogging as well. So anybody want to reach out, I'm just on that website. There's a contact us, and you could just drop down your details. And
Okay. All right. Well, thank you so much. This has been fantastic. I've had so much fun chatting with you.
thank you so much. Thanks for having me, Sophocles. It was a pleasure. It was great. Thank you very much.
Thanks. Podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.